Hey, good morning, everyone. Marty Mazzori here, Friday, the 31st of March, 2023. This will be the morning message. It's just going to be a quick market technical snapshot. We're going to look at the S&P, the Nasdaq, Apple, Microsoft, the VIX, the dollar, and then we'll just touch base one more time on gold and on ag. So these are screens that I've been showing you the last 3 or 4 videos, so I just thought I'd just update those to finish off this week. Then we're going to be off to doing the economic portion of our weekend macro deep dive, and I'm going to come back to you later today. That's the goal with the video on the economic update. So just because this is the morning message, and I normally type this out, so our core position or our core portfolio has 36 positions, and looks like 29 of them are in the green so far this morning. The market's just been awake for the last 16 minutes or so. You're going to get this later after I edit it. Big gainers this morning are Dutch Bros, metals miners, Mexico equities, cybersecurity stocks, military defense stocks, Amazon, silver, MP Materials, Disney's up there, water stocks, industrials, and so on. The losers are AMD, down 1.8%, uranium miners, metals miners, ag, actually is down 0.25%, and now AT&T just barely down, and gold just barely down. Okay, so to the charts. In front of you is the daily chart of the SP 500, and as I pointed out the other day, it actually has a very constructive look to it. That's a bull flag pattern. And if it plays out like the textbook says it should, that's the flagpole, which I just basically copied and put right here. And that takes us to above 4,100, and that's what we've been climbing pretty much ever since that pattern started to develop. And positive look down here as well on the MACD, the two preferred momentum indicators that we look at quite simply. So you have a buy signal here, looking not bad. Certainly on the daily chart for the S&P. When we bring it down to a 60-day, 60-minute chart, it's not as good looking to me, I should tell you, in the short run. We're overbought here on the RSI, and we still have what I would call a negative divergence here on the MACD and a very bearish-looking rising wedge pattern. And I pointed to, yesterday I was doing my chart work, and I just made these yellow rectangles here at the gaps. You can see we gapped up here. Gaps, not always, but they tend to be filled. And that gap got filled. And then here we've got this big gap here right from the opening on Wednesday. Today's candle. And you're still in a rising wedge pattern. You still have some divergences here. You still look a little overbought here. So on the very short term, at least on the hourly chart, today's going to be interesting. I'm going to talk a little bit more here in a minute about the options structure underlying today's trading that is probably going to have some influence during the day. Here is the Nasdaq 100, and this is the hourly chart that I have thrown up here. And folks, as I suggested, this one concerns me as it relates to the overall market. It's had quite the run. In fact, it's had just a really, really good first quarter of this year. In fact, the best quarter since the second quarter of 2020 for tech stocks in particular. Now, that's not the best analog, of course, because that was right at the beginning of a just absolutely massive bear market for tech stocks. We had sold off already. The bear market had already begun, and then we had this quarter of just massive growth. And so that was just a massive bear market rally. And right now, the evidence says to us that that should be our base case, that this is a massive bear market rally that'll probably give up the ghost. And again, we're just talking probabilities. Doesn't mean it has to happen. That's just how things look to us right now. Very willing to change our minds as the evidence changes. So second quarter 2020, not the greatest analog to consider when you say it's the best since then, because thereafter, the Nasdaq went on to stage from peak to trough at 85% decline. Not projecting anything like that, but wouldn't surprise me to see this rally ultimately fizzle out. So time will tell. But on the hourly chart, looks a bit suspect to me. 1 year daily chart frankly, looks very suspect to me. So here we have a high that breaks above this recent area. Again, the bulls could say, hey, what are you talking about? We have a breakout. And they're right, actually. And if you were bullish, you might want to let this run a little bit. And if it looks like it's going to last, go ahead and buy the breakout or buy the retests of this line right here. Our view, or my view especially, is that we're getting really close to overbought territory. You can see when we've gotten there before, right? You can see what that's portended. Pretty big sell-offs, particularly when we have rising wedge patterns going into those, right? And we have a MACD that's hanging in there, but really flattening out against a rising wedge pattern in here. So, time will tell. There was a lot of bearishness coming into this year. There was a lot of short interest. I pointed that out on several videos and in various commentaries this year. And we had the air quotes banking crisis. We've come out of that. Looks like that's settled down a bit. At least that's generally the consensus right now. And and the world isn't coming to an end. Had relatively positive relative to expectations inflation data this morning, which I'll talk about on the economic update. And reasons for shorts to cover, reasons for tech to rally, particularly when you look at inflation coming off the boil, which of course we expect because we expect recession, and that brings interest rates off the boil. And I've explained the other day about long duration stocks, which would be tech stocks, actually at first blush, that being very bullish for. On second blush, if it's a recession that brings interest rates down, that's going to do a real number on corporate earnings and the kind of spending that flows to tech companies, and therefore not such a good thing. So we think tech is uniquely exposed, actually, to the real world impacts of an economic slowdown. So we shall see. I'm open to the bulls narrative and willing to consider it right now. We think the bears narrative makes more sense and that this is a bear market rally. But like I keep saying, we'll keep an open mind. We'll continue to invest. Clearly, we can make money in this environment, even though we're not all that bullish as we have so far this year. Just to update the two biggest components in these major indexes, Apple and Microsoft. Apple is still trading within a very clear rising wedge pattern on the daily chart. Beginning to break through here, but as you can see, this new high comes with again bearish or negative divergence, getting close to overbought here on the RSI. Again, though, if I were a bull, I'd say, hey, here's a breakout. I would at least ride this baby up to 175 before I start worrying, and then ultimately 180 would look like pretty stiff resistance. So if I were bullish right here, I might be thinking about buying this breakout and looking to take some profits up in here in that 170 to 180 range. Bears would tell you, as I'm telling you right here, this looks like it's getting out over its skis. Probably going to lose this breakout right here, and nothing worse than a failed breakout. That's just speculation. Time will tell. I'm not a trader of Apple. Just telling you what we see. And then Microsoft, same thing, pretty much. You've got your similar pattern, a little difficult uptrend line there. I think we can put enough points together here. And tried to break down, but survived that. That was bullish. Same kind of picture, though. Coming out of here, kind of testing that resistance as it looks like it's trying to become support. Again, there's some evidence there for the bulls to run on if they like to. Getting close to overbought. Still have a negative divergence here on the MACD. The VIX, remember we created this graph here a while back, and I was showing you that when we dip below 20, that would pretty much coincide with a test of the bear market downtrend line. And now it's gotten real choppy, a lot more volatility in here, right? And actually a break above and a successful retest of the bear market trend line. Again, so the bulls can be just, really screaming right here, right? But as we sit here today, it looks a little precarious because this is around that level where we had, VIX got compressed down to this level, and then and that's where it bounced, and then that's where we got weakness in the market. Our base case is that ultimately this will be a failed breakout, but time will tell. So we're seeing some signs and some signals. Because I'm on the VIX, let me segue here for a second over to the folks, Spot Gamma, who we pay for their expertise when it comes to what's happening internally in the options market. So JP Morgan has this massive options collar. Clients, that will sound familiar. That's what we implemented when we began hedging portfolios at the end of the last bull market in late summer 2019. Well, they have a collar that they deploy on a large cap fund that they manage. And this collar expires on the calendar quarter, and it expires today. So here's Spot Gamma's commentary about that. Today's JPM roll may have a strong impact on markets. At somewhere mid-morning, we are likely to see the initial roll placed. That, and then they give us a spread. And then that spread likely prints to some type of deep, in-the-money, 0-day to expiration call. And all of this is followed up by a late-day spread adjustment. This trade is obviously heavily watched, and the implementation is likely adjusted to mitigate signal and impact. Simply said, it's hard to draw any conclusion. So anyway, lots of underlying dynamics that can do a number on volatility and so forth. Okay, so let me just speed it up here a little bit. Quick look at the dollar. A rising dollar in this environment would be bearish for stocks. So what have we had? We've had a falling dollar of late. This is the daily chart. And rising stocks, right? And here we have a dollar. It's kind of looking a little bit wedgy to me in here with real building positive divergences. So this would suggest that the dollar maybe has some upside in store. And if it does, that would be a weight on equities. I mentioned gold here a couple times lately. We like gold a lot long term. Short term, we see a technical look that's not so bullish. Kind of have your rising wedge pattern. I pointed to it right in here. We had a big gap down, but it's actually been kind of wrestling its way back a little bit higher. Still have these divergences, still coming off of overbought territory. And then our ag ETF that we like, I pointed to an opposite look, a very bullish looking look to us, a falling wedge pattern. We drew that right in here before the breakout. Bullish divergence on the RSI. Now we have a buy signal, so that's played out pretty nicely. A nice big thrust out of that, overcoming the 50 and 200-day moving averages, and right now coming off a bit and testing the 200-day moving average. So what it's worth, clients who just wanted to give you some short-term expectations if you're paying attention to this position by position. Both of these are bullish positions for us for long-term macro reasons. So there's your morning message, and I'll be back later today or this evening with the economic update. Hope you have a good rest of the day. Talk to you soon. Bye-bye.